Hi everyone, it's your daily 10-minute business and finance news wrap for this Friday, the 29th of October 2021. Later, the markets are really bracing themselves for an earlier than expected interest rate hike. The market was battered today. We'll tell you more in a few moments. But first, one of the world's biggest social media companies is undergoing a name change. The parent company of Facebook, which is also called Facebook and operates other apps like Messenger, Instagram, WhatsApp, and Oculus, has changed its name to Meta. Now, the Facebook social media site, used by nearly 3 billion people every month, will stay as is. Now, the company says it's part of a revamp to develop a virtual world, but others say it's a way of shifting focus from recent controversies. So to find out more, Danielle Robertson spoke with the former Facebook Australia CEO, Stephen Shearer.
I think Facebook is trying to look to the future, and in a way it's the distant future. It's not in the next 5 years, it's more 10, 15, 20 years. And they're saying that there's going to be something beyond the internet as we know it, and beyond the what are called the computing platforms as we know them, which are the screen that you're on or the screen in your hand. And Facebook believes there'll be a world where there's virtual reality, augmented reality, mixed reality. So, we don't just, look around us and we see the things we see today. We'll see other things too. There'll be other things and beings and avatars and bots and things we're interacting with. And our experience will be very different in that world. So Facebook's trying to kind of prepare themselves and the company to move into that future.
And as you mentioned, it's quite a while away, maybe 10 or 15 years. Some of the things in the release were quite, seemed like it's not going to happen next week. How far ahead are they sort of planning? Is it 15 years, even longer? When can we see some of this come to fruition?
I think in some ways, some of these things are already coming to fruition. So if you look at the investments companies like Facebook and Microsoft and Google and others have made into virtual reality, augmented reality, they put a lot of money into it. There's devices today, that virtual reality devices, which are pretty amazing. You put them on and you get some amazing experiences. And if you're a gamer or you're in certain industries, VR and AR is coming into your everyday life, and a lot of gaming environments are very immersive and very kind of multi-dimensional. There's been some movies about this too recently. Ready Player One was one of those films recently. It takes you kind of into that world. So in a sense, it's happening already. But on the other hand, there's a couple of billion iPhones on the face of the earth today, and that's how most people engage with the internet. And the internet today is not the metaverse. For most of it, it's the internet. And so many people believe that's a very good technology. The iPhones are going to be hard to displace, or smartphones, because they are so useful and they're so simple and they work today, and you don't need special goggles or glasses. You just have it in your hand. So it could be a while before we see, thousands and millions and let alone billions of these devices on Earth. And I think until then, the metaverse won't be an everyday occurrence for most people in the world. But, I could be wrong. It could happen faster, but, we'll have to see how it plays out.
And do you have any comments at all on the timing of this rebranding? Like, why is it now? Obviously, Facebook's facing a bit of scrutiny at the moment. Is there thoughts on why they've decided to change it this minute, or announce it anyway?
I mean, the cynical would say, and there's some people that know more than I do about Facebook, would say that this was a hasty decision, that this wasn't planned for a long term, and or it was something they were thinking about, but they brought it forward in order to kind of distract some of the conversation from some of the bad news that Facebook's been generating. I don't know if that's true or not. I do know that when I was at Facebook and I left about 4 years ago, Facebook was already talking about not so much the metaverse, but they were talking about the future after the iPhone. They were talking about virtual reality and augmented reality. They had made big investments into that space already a few years ago. So I'm sure that Mark has been thinking about, how do we reposition the company for this future? And maybe they just, they made the announcement a little sooner than they'd thought because of the press they've been having recently.
Daniel Robertson there speaking with the former Facebook Australia CEO Stephen Shearer. Now to the Australian share market, which fell pretty hard today. The S&P ASX 200 down by 1.4%, and it comes on a day where more economists bring forward their expectations for the first interest rate rise from the Reserve Bank. Remember, the RBA doesn't expect the first interest rate rise to happen until 2024, but we had some pretty strong inflation numbers out this week, and now NAB has become the latest to say it expects rates to start rising from mid-2023. The interesting thing about what it says is that it expects an aggressive series of rate rises up to 2% by the end of 2024. The markets also think so. There's been a bit of action on the bond market. So for more, I spoke earlier with Think Markets analyst Carl Capolinga.
Well, a couple of main factors today driving markets lower. In fact, all but one sector in the red today. Healthcare was the only one that got out with a gain. ResMed, better than expected quarterly report. They announced their results in the US. But the rest of the market's being dragged down, unfortunately, by interest rate concerns. Once again, this is coming back into the market. We've got short-term rates in particular have spiked over the last sort of 24, 48 hours, and that's because the Reserve Bank has moved away from its previous position of trying to keep those rates very, very low. So the Reserve Bank has been buying these short-term bonds with a view that bidding up the prices of those bonds would keep yields down. Of course, when bond yields are down, tends to flow through to the rest of the economy by keeping interest rates for us borrowers lower. So they've moved away from that position over the last 48 hours. It has surprised the markets a little bit. That has sent those yields soaring. Longer-term yields were on the way up anyway, and that's on the back of worse than expected inflation data coming out during the week. So stocks typically don't like higher yields. It makes it that there's a less favourable comparison back to bonds, but also it does increase borrowing costs for businesses. That reduces profits and potentially flows back to us consumers, where we might not spend as much money as well. So a few things going on there. The other thing I would say is iron ore prices have dipped again. We're back below that psychological $120 US a tonne in Singapore. That's dragging on BHP, Rio and Fortescue. But otherwise, look, it's mainly about rates this week, unfortunately.
Okay, so if the market's starting to bet we'll see rates rise sooner than expected, right? What are you expecting to come out from the Reserve Bank when it meets next week? Because there's the meeting, but then there's also the statement on monetary policy as well, isn't there?
Yeah, well, look, I mean, if today's sort of switch, it's probably come at an opportune time in that we don't have to wait too long to hear what the Reserve Bank's thinking. So if it was weeks away, I think markets would be more concerned. But the fact we're going to get an update as soon as Tuesday, I think, is a positive for the market. So we'll only have to wait one day on Monday, and obviously there's a public holiday in part of the country there. So hopefully the impact on markets will be mitigated. Tuesday's the big day. We do expect now that the Reserve Bank will step away from what we call this yield curve control, where they're targeting those shorter rates. Probably what they're going to do is, instead of targeting a single point, that 0.1%, they may widen that. They may say, look, we're going to go to between 0.1 and 0.5%. That's possible. They may go even higher. But look, I think they're going to reiterate this idea that whilst some of these short-term stimulatory measures are going to be unwound, and I think the market knew that was going to happen, rates probably won't take off still until, I think they'll still reiterate that, late 2023 at the very earliest. I mean, they had said 2024. Markets are bringing forward those expectations into 2023. I've even heard some analysts call for 2022. So I think, to sum it up, it's going to be how soon the Reserve Bank changes their position on when those interest rates are going to lift off, and markets will be really keen off that date if we get one. Hopefully we get one.
Yeah, I think the Commonwealth Bank was one of the most aggressive. They're predicting November 2022 is what it said yesterday. Corporate reporting season continues in the US. Apple and Amazon came overnight with some numbers. Any overarching themes?
Well, look, overall, US earnings season has been tracking along pretty well. Most companies are beating expectations, but the commentary looking forward, so that's the part. The commentary looking forward is what everybody's hanging on. And unfortunately, we are starting to see more and more companies warn of these concerns about these, supply chain disruptions. So Apple, quite correctly, you said, came out last night, and they said that this chip shortage is still a major issue for them. And many market analysts have thought that we'd largely got this chip shortage behind us. It's still a problem. There are just general disruptions in terms of getting their product out to market. The other big one, I think, was Amazon, who said, and this is probably the most worrying item, was that labour shortages are now starting to lead to wage increases. And of course, that's something that the Federal Reserve in America will be paying a lot of attention to, because if wages start to rise at a rate that they're not happy with, then they'll almost be forced to come back and have to do something on the interest rate side as well. And we are incidentally going to get an update from them on Thursday. So a massive week next week, RBA on Tuesday and the Federal Reserve on Thursday.
Carl Kapalinga there from Think Markets.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice, and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.